What's up, traders? You're watching Frank's Trades. Thanks for joining today. We got a request to do a stock analysis over Solar Edge. The trading symbol is SEDG. Stocks for Growth is a subscriber, and he recommended this analysis video. And like I said, if you're interested in a publicly trading company and you want another opinion, feel free to ask me. I enjoy talking about stocks and I love researching them. Especially if it's one I've never heard of or paid attention to before. Anyways, Stocks for Growth is up 60% on the stock, which is amazing. Congratulations, by the way. What a pick, especially if you got in late March, early April. From April to now, the stock really respected the RSI, and it would have been something that I would have liked to trade had I seen it. But let's get to the company description and what they do. So Solar Edge is a renewable energy company. They make solar panels, but they also manufacture their own way of harvesting power from the sun using a DC optimizer inverter solution. I don't even know what that means. You don't have to know what that means. Just know that they changed things for the better when it came to obtaining power, when it comes to solar power. Their product lowered energy costs and have improved the solar industry. That's basically the gist of their company, and now that you know who they are, I want to talk price action. So Solar Edge is up about 30% for the year, outperforming most other stocks in its sector. Here the analysis gave it a buy rating based on technicals, and by the way, that isn't such a great indicator to follow in my opinion. Usually you see technical analysts give a company a buy rating after the company has already shown like a high performance, like either after a long gain or a jump in prices, which usually means if you're trading the stock that rates a buy after you have seen it run up in price, you're probably buying in a little too high. And it's vice versa. They'll have a strong sell rating on a stock that's been falling for the past week or so, and they'll just tell you to stay out of it completely. But what I like about this trade Stocks for Growth took is that he actually bought the bottom when fear was high and greed was low, basically, is what I'm trying to say. I'm not saying he was perfect on the entry, but you don't have to be. And this is proof when you see it going over a 70% gain. And this was after a poor earnings report, yet the company still increased its revenue. So investors liked hearing that, and the price increased. And since we're talking about revenues, let's go to financials. If you look, starting back in March of last year, it seems to have been a steady growth in revenue. And now it's at $271 million the first quarter of 2019. This company has actually exceeded expectation of sales for Q1. Even after earnings had been lower than the estimate, it was still higher than last quarter and revenues were still climbing. That's what caused the gap from 43 to 55 the next day on May 6, 2019. So here the article is saying that Solar Edge beat expectations, which was basically the big run they had this past month. But honestly, this looked like an excellent trade back in April or May, and I think Solar Edge is definitely a company to keep your eye on. But right now I would not buy it, just in my opinion. Stocks for Growth, you are up 60% on this trade. If I were you, I would be taking profits, and if not, closing my whole position. This is already a huge winner, and fundamentally the stock is reacting to good reports, but also this market has been soaring recently. Right now, I am scaling out of my positions and slowly taking profits because I'm ready for another pullback coming soon. And when I say taking profits, I mean selling some shares and waiting to get in on the pullback. Some prices were a steal back a month ago. Look at Apple. It was somewhere it was like 180 or so. Now it's over 200. You wouldn't want to get out of Apple completely, because it's not often you see it touching on those levels. And I mean the same thing for Solar Edge. If you're up 50, 60% on a trade with good fundamentals to back you up, there's no need to sell out of it all. With Solar Edge's stellar performance thus far, I can't see it dropping down into the 30s again. So I'm thinking if this company keeps this up, they'll be well over 60 in a year. But right now it's a little too high, again, in the short term. But overall, it's a great stock. And back to the chart really quick. I drew some support lines that I thought were some key levels. The dotted line at the top is a speculative line, so I'm just looking at that as a possible support line in the making. So overall, I would consider this company a good investment and a sound company, but not a long trade right now. I would go long if I see a pullback. I also think this, along with many other stocks, are influenced by the recent confidence in the Trump and the President Xi, I believe. I don't know how to pronounce his name, of China. Their truce regarding the issues of trade. That seems to be going well, and people think they're making great progress. So that seems to be a big influence in the market right now. Anyways, I hope you guys liked this video. Again, congrats, Stocks for Growth. What an amazing trade you had. Enjoy the winter, and I hope this was helpful to you as well as everyone else watching. Thanks again, guys. If you aren't subscribed, please hit that subscribe button. Thank you all for watching. This is Frank's Trades, and see you next time.